Morning, everybody. It's the 3rd of March. We are Signal Centre Talking Ball. I'm Joe Neighbour, joined by Steve O'Hare. Good morning, Steve.
Morning, mate. You right?
Yeah, not bad, thank you.
Excellent.
Got a fair bit going on in the markets today, particularly in the UK. We've got the budget, which
Yeah.
is happening later on today. I mean, I think most of what he's going to say has already been leaked.
Yeah, it
So
seems like it, doesn't it?
I don't think there's any surprises that are going to come from it or opportunities to
Maybe.
trade. I think may have already been factored in, but we'll have to wait and see what he has in his red briefcase later on today. So he has set the scene for possible tax increases and spending cuts to recoup some of the huge payouts that have arisen as a result of the pandemic. Obviously, support measures like furlough, which is set to be extended until September. There's also going to be further help for the self-employed as well. So he's likely to hold fire on any corporate tax hikes until some sort of normality has resumed, which will be music to companies' ears. But there may be higher rates to come, because at some point we are going to have to face the music with regards to paying this back. So in terms of the equity markets in the UK, I think people will be watching the house builders. There's talk of the stamp duty holiday being extended. So that will also have a knock-on effect to mortgage lenders and banks, and of course pubs and restaurants, who are expected to be in key focus today, with more supportive measures once the UK economy reopens in the coming weeks.
Oh, that sounds good when you said coming weeks.
Yeah, it's
Doesn't
not
sound far away, does it?
No, when is the pubs? Is it the 12th of April, I think, or something like that? Oh no, it's end 29th of March, end of the month, isn't it? You can
I
have
thought it
beers
was
outside.
5 weeks. I thought it was sort of 12th of April sounded right to start with. I think it was every 5 weeks there was some sort of move, wasn't there? So I don't
I think it
know.
might be the end of the month, but anyway, it's not soon enough.
No. Well, I've run out of beer in my fridge, I realised last night when I wanted to have a cold one. But
no.
hopefully Tina's ordered some from the Tesco man today.
No, let's hope so.
Yeah, but it's going to be a bit weird, sort of, isn't it, opening up anyway? I think it's going to take a lot for us to adjust back to some sort of normality. Let's wait and see. It's going to be, it's not going to be easy, I don't think, for a lot of people.
No. So obviously we've got our plan in place for lockdown. The German economy is doing the same at the moment. The German Chancellor Angela Merkel has proposed a 4-step lockdown easing strategy, accompanied by widespread COVID-19 testing. I think they're under a bit of political pressure to open up the largest economy in Europe. So there will be restrictions on private meetings between households, which will be adjusted, and measures like shuttering non-essential stores and gyms and restaurants will be prolonged for the time being. Aside from COVID news, in terms of what we can expect today, we do have this OPEC Plus meeting. So we could see some further moves in oil. Steve will come on to some charts on that shortly about how that's been reacting over the last couple of days or so. But it's expected that the group is going to absorb extra barrels. Obviously, with the price moving higher, I guess there's room to start a bit more production. And you want to bring your price down, though, I suppose, and restrict the production. But talking about another 1.5 million barrels a day.
Right. That's from OPEC Plus.
Yeah.
Right. Okay. Well, I mean, interesting. I just did a short presentation on oil as well. I looked at oil crude, the WTI crude, and oil Brent, which are different in price. That Brent trades at a premium. The oil WTI is the West Texas intermediary. That obviously it was impacted recently as well with the cold snap that Texas had, but also that also went hand in hand with a drop in demand. So it didn't really have the effect that we were expecting. But anyway, if I can, I'm sharing my screen, Joe. If I can sort of look at the, it's a bit of a sort of like, these are classic formations which I really look out for all the time. And while we got the oil crude, the WTI, sorry, this formation looks to be forming, potential for a break lower and a close below the neckline, and that will confirm the formation. That has a measured move target of around about $55. We're trading at 59.71 at the moment. We're below the 4-hour cloud, so for me that's a negative. I like to use the Ichimoku cloud when trading, and also these formations and candlesticks. But looking at Brent oil, it's a little bit more interesting, where as we can see there's this slightly shorter term head and shoulders formation amongst the bigger head and shoulders formation. So we'll do this big one. You see Cameron trying to sort of like go past while he's sneak past when he's on the floor, which is quite funny. And this right, it's a bit convoluted now. So this is obviously another, there's two head and shoulders formations here. One is obviously formed, and the other one is similar to the WTI crude oil one. So this other one will have a measured, it's not played out yet, but that will have a measured move target down to around about $58, trading at 62.61 now. So yeah, maybe we will see a little bit. I mean, we'll still be in a bullish trend, so nothing would change then. So it's just be a normal correction. And you know, possibly a few people out there quite happy to see it. I'm sure we won't see it at the pumps unless Rishi comes up with some the goods today, but I doubt it. No. The other market I'm really keeping a good close eye on is gold. That's obviously under a bit of pressure. Dollar has stopped the big sell-off, and is really sort of it seems to be going hand in hand with gold at the moment, although we did see a nice little rally yesterday, nice little squeeze higher, but there's again plenty of room for a correction higher without affecting this bearish trend that we're in. I've spoke about the weekly chart in gold, where I am very bullish at gold over the coming months, potentially a couple of years, targeting move up to about the $2,500. I think that will be based on a dollar issue. Don't know what it will be, but it won't be good for the dollar. And on the daily chart, we posted a bullish hammer yesterday, so that's potentially positive for gold, but I wouldn't get too carried away with it because we're in this bearish trend, short-term trend lower at the moment. Levels to watch really for me in gold are $1,700, which we didn't get too far away from yesterday, and also around about 1660, which is more around the congestion area we had back in April last year, just after the pandemic hit, when we saw obviously the big spike lower, decent move from 1700 down to 1450 in the matter of a couple of weeks, and then we got the relief rally back higher, which then formed new highs. So all okay in gold, but short term a little bit under pressure. Copper had a bit of a bounce back yesterday on the daily chart. We had this inverted hammer the day before, and then this bullish outside candle, which covered the previous 2 days of price action, which for me is very bullish and looks potentially like we're going to look to retest the recent swing high, which comes in at 436, on its way to a measured move target that we're looking for around about 460 in gold, or in copper on the weekly chart. This double bottom formation playing out, that comes in there at 470. So that's it on the commodity front. Indices themselves, they had a sort of like quite a decent move yesterday. Well, over the last couple of days, it's been pretty positive in the FTSE. I'm still looking at this potential head and shoulders formation. Let's try and get rid of this here so we can get more information on here. We're still in a bit of a positive channel. Looks a little bit like an ending wedge, but not quite. More of a corrective channel formation for me. So still potential for further upside. Indices continue to bounce back, and the next level in here for me is around about 68.12, a break above 68.12 in the FTSE, and we should see an extended move higher in that to retest the 69.60 swing high. back from early in the year. DAX, this is a bit more of an ending wedge formation, and we're back at the highs here, looking pretty good. That isn't all-time highs, is it? Is that all-time highs? Let me have a little look at my weekly chart, which has disappeared. Oh, that doesn't want to play. Maybe I found it, the all-time highs. We've had a push higher this morning. I think we've on an intraday basis, we were looking at a seller rally, and we're triggered in that, and it has pushed a little bit higher, still just in front of the 14,200 level, and pulled back a little bit. But obviously, this is the previous highs we thought may hold, 14,158, and then above that we got 14,194. So be a bit wary about these previous swing highs where price action has failed here. Popping across the pond to the Dow. This is on an hourly chart. Let's get a little bit more view on the daily chart. The all-time high just above 32,000, that's 32,080. We're trading 31,582, but obviously recaptured all of yesterday's losses on the daily chart, so that's looking quite positive. Nasdaq also, we're looking at a potential head and shoulders formation, but we have had a nice little bounce back over the last couple of days. This bullish morning star formation, and really
still lagging, isn't it?
Yeah, it is. Let's get rid of this formation so we can see the levels a bit clearly. It is still lagging, but a break above 13,356 should open up a retest of that all-time high. But yeah, the pullback yesterday, a bit of a stinker for Nasdaq. S&Ps as well has not really tested the 4,000 level, which we were sort of talking about for a while. That's had a retest of the bullish channel formation, and it bounced really nicely and aggressively off it, but sort of stalled yesterday. So yeah, all pretty tricky, the markets. I don't really know which one really stands out for me as the real potential to look at today. Thinking about the gun to head challenge, but yeah, I don't know if there's anything else that you want to run through on the Forex side of things, Joe?
Yeah.
Or should I just carry on?
No, I'd just take it off your hands there. So first up, just looking at really a big overview of the currency baskets, currency indices that I like to use, really as a bit of a guide on direction, and then sort of zoom into the pairs within those that look interesting. I mean,
is that
clearly,
from the start of the year, is it? It's not far off the start of the year,
that's
is
from
it?
the start of the year. So
Yeah.
as we've discussed on numerous occasions, dollar index has been, a underperformer. If you look at it on that chart, actually, since the start of the year, it's this blue line right here. So just flatlining really, and I think that kind of is in line with maybe the potential of a bottom taking shape in dollar index, which I know Ian and myself have been sort of mentioning, but it's yet to materialize. You can see here also down the bottom we've got the Japanese currency and the Swiss currencies really underperforming, and that is a clear indication that people are shunning safe haven assets in favor of riskier assets. At the top here we have British pound, Aussie dollar, New Zealand dollar and Canadian dollar. So they're the currencies that continue to perform very well. If we look at sort of the price action on dollar index, this is kind of what we're seeing at the moment. So this is the daily chart. This was the March highs in dollar index, and obviously it's just been a pretty relentless sell-off since then. But back here we have broken out of this downtrend, and we are starting to see some sideways choppy price action. So that may indicate that a bottom is trying to form. I think in order to confirm that, we would need to see a fairly decent break above 91.60. We did have a couple of decent days worth of price action up until yesterday, but then we posted this bearish looking candle, so we had a little bit of a poke above those levels at 91.12, got as high as 91.39 before reversing all of that. Not quite an outside candle, but certainly not far off. I guess you could call that, a bit of an engulfing candle, which would indicate that we may see lower prices. I don't know whether we're going to get back down to these lows, but I just think it's going to be more choppy price action on the US dollar for the time being.
Yeah.
If we look at euro dollar, so clearly that's been trending higher while dollar index has been trending lower. A decent looking candle was formed on that yesterday, pretty much at trend support. We did have a little bit of a poke below, but we got all the way back up to form again an engulfing looking candle. A little bit of weakness today, but I think provided we stay above that low that we posted yesterday at 119.92, then we can continue to see move higher in that. If that breaks, then I'd be I think of the opinion that we could see a top pattern have formed on euro dollar and therefore a corrective move to the downside. So keeping an eye on that level now for now. As for all the other markets, obviously we talked about Aussie dollar being in a bullish trend at the moment. This is the daily chart on Aussie CAD. Potentially a break of trend there. I would like to see how it reacts to that 99.06 level to see whether or not we're going to continue higher or whether or not we are forming a bit of a top on that. Aussie dollar still looks pretty bullish, although we did have a decent sell-off, but contained around about those levels. Let's have a look at euro sterling. Again, I think it's just a case of these trends continuing for now. There's no sort of definite break of trends or bottom patterns forming, but I think what we're going to see is just really a continuation of choppy price action over the coming days, and continuations of these trends that we've seen. So nothing particularly stand out for me at the moment in FX, but it's a case of watching and waiting on a few of these for now. Yeah, I think that's pretty much it for me on the FX front. Unless you've seen anything, Steve, that sort of stood out for you.
I was really sort of like trying to look at sort of sterling really based on what could be going on today. And again, it's sort of there's nothing really clear on there. On a sort of like a daily perspective, I think the euro sterling looked like posted some sort of bullish hammer a few days ago. But I think there seems to be also short term. There seems to be a little bit of potential for a reversal back down to that to retest the lows. So I think, like you say, wait for something a little bit clearer on the forex side of things. Not really going to get involved in that. I'm going to sort of like go to the go-to markets for the gun to head challenge. I think. How did we do yesterday? I think we did okay, didn't we? We
did do okay. We've got another 2 winners yesterday. Let me just share the screen. So I went short of Nasdaq, and I was 0.65R on side at 9 o'clock, and you hit target on your oil long with a 3R return.
I mean, you saw that.
Yeah, you nailed it, and then it absolutely died, didn't it? After that.
Well, it's funny actually. I was going to mention that we had obviously one of our analysts was doing the. No, it's nothing really to show on the chart.
Okay,
it was one of our. Well, actually, I'll show you the price action, so I'll be able to pinpoint it a little bit more. Oh yeah, I mean, there's. I thought I deleted this, but obviously because it is a winner, I kept it. But we can see there is my where we've got long, close to being stopped out. Where was my stop? 60, 52, 59.50 was the low. 59.56. So only 6 cents away from getting stopped out. Ooh, that's close. And we saw it did spike up and took the target. And on the intraday chart, our analyst was looking to sell a rally at 60.81, I think. So Joe? We, you know what? I thought it was Majid. I'll have a double check.
We'll give him a shout out tomorrow.
Yeah, it actually could have been Joe. Let me double check. Yeah, and I sort of thought that sort of just sort of shows and highlights the fact that yeah, it was Joe. Well done, Joe. How I always believe during the day, there's obviously 2 great trades. Managed to pick one at 9 o'clock and hit the target, and Joe managed to pick the close to the top in that rally.
Good teamwork,
So that was
lads.
really good, really good. Nice
Topped and
dovetailing
tailed
there.
the market, yeah.
Yeah, it's nice. Doesn't happen often, so it's nice to see it when both play out. I don't think he quite managed to hit target, but he may have done. So I'll double check that. Yeah. So yeah, I think that's just really that's all we sort of I wanted to sort of highlight. It was quite a good little capture.
Good.
Let's make sure it continues.
What you got today then?
So show me again what the guns ahead details are.
Okay, so this is the overall chart now. So a decent tick up in the last couple of days as a result of our winning trades. So overall, there we are. You're just shy of 20R.
Okay, all right, nice. I haven't been up there for a while.
No.
Whatever.
Yeah, you have been up there before. You can see there was your previous equity high, which was 22.12. So a nice win today, and you'll be making new highs on your P&L, which will be good.
Yeah. Okay. Cool.
No pressure.
No pressure at all. So yeah, that's. I don't know what to go for next. What are you going to do?
I was hoping you was going to take ages in coming up with an idea, so that would give me a bit of time. Although I've just found something I'm quite happy with, actually.
You're just watching me do the gold, are you?
No, I was looking at Eurodollar. Obviously talked about that bullish-looking candle yesterday.
Yeah.
But just looking at what's happened over the last couple of hours or so, there is. I mean, this is just an hourly chart. Obviously, we're going into much smaller time frames here, but you could see that there's a bullish looking channel that's formed on the hourly chart. We saw a breakdown of that on the 26th, and then we saw that go down to lows of 119.92. So this push up yesterday is what formed that bullish looking candle. But if we zoom right in to the last hour, you can see there's quite a bearish looking candle that's formed there.
Yeah.
Having rejected at the underside of this channel. So I'm going to sell Eurodollar at 120.76. Going to place a stop loss above that swing high that we saw in the last hour or so at 121.09. And I'm going to target a move down to these lows here at 119.54. Quite ambitious, I think, as a target today, but you never know. That was the swing low that we saw on the 5th of February. So that is my trade of the day, selling Eurodollar.
Cool.
What do you got, Steve?
Well, I'm going to go with my selling gold, which approach, which I still believe there's a little bit more to the downside. We do have a little bit of we had a little bit of correction over the last 24 hours, but that's sort of like run out of steam overnight. So looking to set shorts at 17.26.33. The stop is at 17.38. Sorry, 17.26.86. The stop is at 17.38.86, and the target is 16.90.86. I think the sort of the recent swing low is 17.07 in gold. I think if we break 1700, we should have a little bit of a flush out of stops. 16.60 for me is the supportive area for gold.
Was that your level you had on the daily chart?
Yes, probably. Yeah, the sort of congestion area which we had to swing lows to.
Yeah, you're looking to sort of set your medium to long term longs.
Yeah, well, I mean
that C leg.
Yeah, I sort of think that there is a potential for a serious break lower. 1450 in my eyes is the real this value area from a technical perspective in gold. That's a long way off though, so I'm sort of like 1660 is a major hurdle. If it gets through there, then I think 1450 is, more so on the cards, definitely. But yeah, so I'm going to go for this short-term trade, intraday trade, selling it with about a 12-point stop and about a 36-point target. So 3-1.
Good. That would do nicely.
Also, there was something else that cropped up that I wanted to sort of run through. I can't remember what it was now. I'm really annoyed. Go on, you carry on. If you waffle for a bit, then I might be able to remember. Or are we finishing now?
We're not too far away, so just really an update on what is due out in a little while. So we've got the US ADP employment report at 1:15. That's obviously a precursor to Friday's non-farm payroll. Forecasts to rise by 105k from 174k last month. At 3 p.m. we have US ISM non-manufacturing. The index is expected to fall to 58.2 from 58.7 a month previously. And then for the people watching the oil market, we have the weekly crude inventories due at 3:30. Stockpiles rose by 2.8 million barrels in the previous week, and in combination with that, obviously we've got this OPEC Plus meeting that's ongoing as well. So potential for some fireworks maybe in the oil market later today.
Yeah, just a thought to take away. Actually, I can't remember where I read it now. It was. I'm glad I remembered though, because I would have been frustrated. So after the 1929 crash, did I talk about this yesterday? Joe, stop me if I did. Basically, some people are saying that the real thing to watch for the economy to really recapture what it needs to recapture to be a solid economy again is the savings rate. Now, before the 1929 crash, the savings rate on average was 4%. So I take it is earned income. People save 4% of that earned income after cost. Right. After 1929, it increased to 7%, and it stayed around 7% for 10 years. So that is sort of the type of quandary we're in at the moment. I think after the pandemic, a lot of people over the last year who've been able to, obviously, unfortunately, there's a lot that haven't been able to save money, have been squirreling it away, and that's potentially impacting on yields in the US and everything. So there is with the yields going higher in the US, there's obviously people really thinking about investing in that higher yield. It's a safer way of investing than obviously going into other assets.
Yeah, I mean, I think we mentioned that earlier in the week that, as you say, the quandary of do you invest for a risk-free rate of return in US yields or UK government yields for 1 to 2%, or do you start chasing equity markets when they're up at ridiculous highs?
Yeah, I think that we seem to be a more, risky sort of like era. But I just sort of think that there will be more people, we're sort of hoping the economy is going to open up and people are going to start spending, but it may not be as straightforward as that. People might want to spend, but they'll be having one eye on their bank account, and the fact that things go wrong again, they'll want to have some sort of savings that they can sort of fall back on. So I don't think it's a straightforward open up, here we go. It might be short term, but after the 1929 crash, it took 10 years before people started to spend.
Yeah, there was a news article on, I think I heard it on the radio, that was saying people have used the pandemic to pay down debt more so than any other time.
That's definitely happening in our household. The kids can tell me that.
It's I mean, there's a lot of new money in the market as well, don't forget, and they've been very risk averse. I mean, savers have just not been rewarded really at any time since 2009, 2008, prior to the financial crash, when interest rates were, much higher than they are now, and obviously interest rates really haven't budged very much in that time period. So maybe it's going to be a time to, the saver will be rewarded by not taking any risk, and they can grow their money without taking risk. It's which wouldn't be good for equity markets, but you wouldn't think that's the case at the minute, given where they are.
Yeah, well, I think that we'll see it in the budget as well. We'll see Rishi trying to encourage people back into the housing market as well, encourage first-time buyers, acting as a guarantee for them, things like that. Everything being talked about. So let's wait and see. We'll be a bit more aware of what's going on within the UK later today, and we'll be able to report back tomorrow.
Indeed. Okay, well, let's wrap it up there then. Thanks, Steve, and to everyone that watched, and we'll be back tomorrow morning.
Thanks. Bye.
Cheers, Em. Bye-bye.